Today, the countdown for the SEC's decision on spot Bitcoin ETFs enters its final hours. At the same time, the agency scrambles to investigate an incident on its X account. And Ric Edelman, founder of the Digital Assets Council of Financial Professionals, weighs in on the impact of an SEC decision on crypto markets. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices are mixed as investors await a decision on spot Bitcoin ETFs, which could happen any minute now. As of 3 p.m. Eastern, when this show is going up, we don't have an announcement on spot Bitcoin ETFs quite yet. As of noon Eastern, Bitcoin fell to the $45,000 level after trading at a nearly 2-year high the past couple of days. The price of the cryptocurrency dropped during late afternoon trading yesterday following a false social media post from the X account of the SEC that stated the agency had approved Bitcoin ETFs for trading. We'll get to more on that in just a bit. Ether, however, soared more than 6% to $2,400 as analysts at CNBC spoke with said that they believe the market is now thinking about an SEC approval of spot ETH ETFs. That decision is expected to happen beginning in May. Meanwhile, Grayscale's Bitcoin Trust dropped nearly 2% since noon yesterday, trading at around $38. According to YCharts, the discount on GBTC compared to Bitcoin itself was around 6.5%. Now, this morning, Fundstrat Global Advisors managing partner Tom Lee joined CNBC's Squawk Box, where he discussed his 1-year and 5-year price target for Bitcoin with the SEC's ETF decision in the mix.
I think in the next 12 months, something over 100,000, maybe 150,000. And, in the next 5 years, again, there's a finite supply. And now we have a potentially huge increase in demand with a spot Bitcoin approval. So I think in 5 years, something around 500,000 would be potentially achievable.
Okay, let's talk about all the latest in the push for a spot Bitcoin ETF in the U.S. And we have to start with the SEC's controversy on X. Now, on Tuesday, around 4 p.m., a tweet from the SEC's X account claimed that the agency had approved a spot Bitcoin ETF. That turned out not to be the case. A spokesperson from the agency told CNBC in a statement, quote, the SEC's @SECGov X/Twitter account has been compromised. The unauthorized tweet regarding Bitcoin ETFs was not made by the SEC or its staff. The confusion around that post also sent Bitcoin's price swinging wildly, spiking above $47,000 before quickly retreating. Now, a little later, an SEC spokesperson told CNBC that an unknown party had accessed its X account a little after 4 p.m. Eastern, and that the agency was investigating the matter alongside law enforcement and its partners. The SEC and the police won't be the only government officials looking into this incident either. U.S. Senators J.D. Vance of Ohio and Tom Tillis of North Carolina sent a letter to the SEC demanding that the agency send a briefing on this incident by January 23rd. Senator Vance said it was unacceptable that the agency entrusted with regulating the epicenter of the world's capital markets would make such a colossal error. And this morning, former SEC Chairman Jay Clayton joined CNBC Squawk Box to react to this event.
I think it demonstrates that everybody needs better cyber hygiene and constant cyber hygiene. And yes, let's not bury that. Is there irony here? Are control systems part of the SEC's purview? Sure. Is market manipulation something that the SEC enforces and deals with? And are both of those at issue here? Yes. Which is why I go back to what do? You communicate with your constituencies and tell them what you're doing to address those things.
Now, at the same time, asset managers are still marching ahead with the last touches to their ETF filings in these final hours before the SEC's deadline. Both BlackRock and ARK21 shares updated fees for their ETF proposals, joining a growing race among prospective issuers to cut fees and, in turn, just maybe increase market share if these ETFs come to fruition. BlackRock reduced its fee from 0.3% to 0.25%, and ARK21 shares dropped its fee from 0.25% to 0.21%. William Quigley, the co-founder of Tether, joined CNBC's Squawk on the Street this morning, where he argued that the ETFs would open up a huge base of new institutional capital. He outlined the questions he has about the mechanics of those spot Bitcoin ETFs.
How will the institutions think about the suitability of this for their clients. There is a massive amount of discretionary capital that these institutions control. Will the suitability tests, how will they be conducted? What about margin? You know, you can get 60% margin on a lot of stocks. Is this a marginable asset? In exchanges and places where people currently acquire Bitcoin, they're able to access loans using the Bitcoin that they own. They can borrow against it. I don't know what a lot of these institutions are going to say. Many of them may just say, we're not going to open this up to anybody but institutionals initially. But people like Schwab, Robinhood, those types of self-directed investment platforms, they may say buy and sell as you wish.
All right, let's stick with ETFs for our main story. Ahead of that much anticipated decision, I spoke with Ric Edelman, the founder of the Digital Assets Council of Financial Professionals, about what to expect for crypto markets long term if they do win approval. As of right now, there has been no decision on spot Bitcoin ETFs. The agency is widely expected to approve at least one application. So let's talk about that outcome. If the SEC does approve one of those applications and it does come to market, what's your take on the significance of a decision like that for Bitcoin and crypto more broadly?
Well, this is clearly the biggest event for crypto in 10 years. This is the holy grail of crypto. Everybody's been waiting for a spot Bitcoin ETF because ETFs are the most popular investment vehicle in America for all the obvious reasons. They're low in cost, high in liquidity. They're extremely affordable. You can buy them in an ordinary brokerage account where you can easily rebalance and dollar cost average and tax loss harvest. Easy for advisors to engage on behalf of their clients as well as for retail investors. And it's been elusive. The SEC has repeatedly said no. So the availability, finally, after a decade of attempts to bring these to market, is going to create a flood of new assets from both retail investors and investment advisors. But not right away, Mac. It's going to take time for these asset flows to occur. Months, frankly, not days or weeks.
Now, what kind of buy-in would you expect for these products? What's the makeup, would you say, for retail versus institutional participation? You know, there wasn't much excitement for the ETH future ETFs that hit the market in 2023. How would this be different?
Yeah, it'll be different for a very fundamental way. Most people don't buy futures. I mean, do you buy stock futures? If you don't buy stock futures, why would you buy Bitcoin futures? So it's a very different product, and that's why it didn't get all that much excitement. But there are about 25% of U.S. Americans who own Bitcoin today. A whole lot more are referring to themselves as crypto curious. They would like to own it, but they found it daunting because, you know, opening an account on a crypto exchange and dealing with hot and cold wallets and private keys, that's intimidating. But the ETF makes all those issues go away, and it makes this product now available simply, easily, conveniently, in a very familiar format. So we think retail investors are going to engage in this, and relatively in big numbers. Advisors, too, have said the same thing. They have been unable to provide Bitcoin to clients because of the lack of an ETF. Now that it's here, 80+% of advisors say they're going to allocate to it. The average allocation will be 2.5% of the portfolio. That's going to translate to $100 to $200 billion of asset flows over the next couple of years.
Now, would you expect other kinds of crypto ETFs to come to market? Some people are pushing for Ethereum ETFs. Of course, there's still a lot of contention around whether certain crypto assets are securities or commodities. So what's your outlook for that long term?
Yeah, this is just the beginning. So we're going to see a whole array of new products come out. As you said, an Ethereum ETF, eventually that's going to take a long time. The SEC is moving slowly. Look how long it took to bring the Bitcoin to market. So the Ethereum ETF will take a while. You'll see combination ETFs. This is, after all, a single asset ETF, Bitcoin only. So a combination of Bitcoin and Ethereum is going to be popular. You're also going to see more trading strategies. You'll find inverse ETFs. You'll find 2X and 3X ETFs. You'll find actively managed ETFs where they'll move with the market in an attempt to beat the index. So this is just the beginning. Over the next few years, you're going to have dozens and dozens of ETFs using a wide variety of trading and investment strategies, just like you have in the stock market.
Now, what do you make of Wall Street's hype for crypto heading into 2024? It seems that at least Bitcoin is back in style, but what about crypto more broadly? And separately, how do you see investment advisors thinking about the space?
This is a rising tide scenario. So Ethereum is rising as much as Bitcoin is. In fact, it did better last year than Bitcoin in a lot of the funds, like at ETHE, at ETH. So we're going to see mainstreaming of crypto as we have the biggest Wall Street firms engaging: JP Morgan, Goldman Sachs, Fidelity, BlackRock, Franklin Templeton, Invesco. When you've got these kinds of trillion-dollar powerhouses getting engaged, it's not going to take long for this to become ubiquitous in portfolios, both the retail and institutional levels. And this is why advisors are going to be engaging. They're going to hurry up because there's so much market competition. The SEC is likely to approve many, maybe most, perhaps even all of these applications. That's creating a lot of marketing, a lot of competition, massive advertising by these ETF providers. That means investors are going to pay attention. They're going to call their advisors. They're going to say, should I invest? How much should I invest? Which one should I buy? Advisors are therefore going to engage because FOMO is going to set in, the fear of missing out. So you're going to find a lot of folks jumping into this over the next couple of years, and that means the price of Bitcoin is going to skyrocket.
You already started to get into this, but long term, what's going to be more popular, spot or futures Bitcoin ETF?
Spot, there's no question. And same as in the stock market. You know, spot equities are much more popular than futures trading. So this will be no different. But they both have a place because some investors prefer to trade futures contracts as opposed to buying spot. Just like you've got some people engaging in short positions. So they all have a role in the diversified portfolio, and based on your investment strategy, your attitude and your outlook and your risk tolerance. So they'll all have a place in the marketplace.
Okay, that's all for Crypto World today, but we will be back again tomorrow with the latest on the SEC decision on spot Bitcoin ETFs. We'll see you then.